we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome. You're watching Ask BQ on Bloomberg Quint. I am Agam Akil. Hi, Alex.
Hi, Agam. Well, like he said, I'm Alex. If you've got questions on equity, then this is the perfect show for you. You can send those queries in to us on Twitter, Facebook, YouTube, and WhatsApp. You can also call us on 022-4540-4141. Or you can mail us on askbq@bloombergquint.com. Only make sure to add the AskBQ hashtag.
Okay, let's take a look at the benchmarks very quickly. We are seeing a range-bound movement again. Some amount of weakness in the Nifty and the Sensex, but it's hardly any. The crucial level, 10,900, well, that's been lost on the Nifty 50, and Sensex again hovering just above the mark of 36,000 at this point in time. The Nifty Banking Index too is largely range bound, as you can see, just below 26,900, and again it's very quiet, and I reckon to a certain extent the markets are waiting for triggers to come in. Of course, we will have the RBI policy later on this week, but it's still a long way ahead. That said, let's take a look at some of those big movers and losers, rather gainers and losers in today's day of trade. We do have Indiabulls Housing Finance advancing by 5.5%. Vedanta, along with Hindalco, in fact, the metal pack is doing well in general. So we do have gains there. Gains in Power Grid, GAIL, and Ultratech Cement as well. Let's take a look at the losers then. And we do see considerable weakness in Sun Pharma after we understand is that a certain insider trading case is going to be reopened for the company. That's why it's under pressure. M&M and UPL, among others, which are losing out. UPL was one of the top gainers on the Nifty in the month of November, but for now it is seeing some amount of weakness. Not too much to speak for otherwise, Alex. It's been fairly range bound, and we're going to keep an eye on the turnovers today.
All right. Well, with that, let's get our two experts of the day in. We've got Jignesh Mehta of kiranjadhav.com, and we've got Parthiv Shah of TRACOM Stockbrokers, who are here to answer all of your questions. Well, it's interesting because, and I'm sure a lot of people have been looking at it, Agam. The fact that crude is the big talking point, despite the fact that you have the truce that took place between the US and China, 90 days of a bit of a breather where something more concrete can come up. In fact, it's off the highs of the day, 4.5% higher as of now. We're talking about Brent crude here, and perhaps that's been a bit of a dampener for the Indian markets. Globally, you saw several equity markets doing quite well. But having said that, let's get in a view on the oil marketing companies here while we're speaking about it. Parthiv, what's your strategy here for the longer term? Obviously, would you, hazard or would you attempt touching any of these companies at the moment?
I think talking about the oil marketing companies, no doubt, I think the global macro setup is extremely conducive for them in terms of the oil prices having cooled off. Now they're slowly, gradually kind of bottoming and rebounding. The currency having appreciated a lot. This bodes well, but the biggest problem with these companies is the uncertainty and lumpiness of the earnings. Whether we talk of the refining business, which at most cases I think have disappointed. We are not sure about how the inventory had been managed, so the inventory losses, and also the processing of what type of crude, heavy or sweet. I think it all depends upon what all these factors will put into decide the outcome of the earnings, and that trajectory has not been very satisfactory. So despite the very cheap valuations, despite all the setup being good for them, and also most probably what we sense is that going into the elections even next year, I think these companies will be under pressure because there will be populistic measures, no two ways about it, wherein these companies might have to sacrifice even further marketing margins. So in all these cases, I think probably a further re-rating is not on the cards. It could be at the best positional trading bets, but frankly speaking, I think I would wish to avoid all the three oil marketing companies.
All right, for now, well, Parthiv wishes to avoid all the marketing companies, so I'm going to go in and but perhaps take a technical query right now. And this one is on Tata Steel. So let's pull up Tata Steel, and this query comes on YouTube. Well, want to get a short-term view here. So Jignesh, how are you reading cues on Tata Steel, and what about your risk-reward ratio with respect to going long on Tata Steel, especially today when we have seen so much strength in a lot of these metal companies?
Yes, of course. Today, the way the metal sector is forming, I think it is making quite high tops and high bottoms for the day. Tata still should not be ignored, although it is showing some kind of pressure today. However, I believe that the stop loss for the Tata still should be at around 530 some levels. So from the current level, it is away about 9 rupees. If there is a positional view, I think Tata still can take a jump and at least go to 558, 560 levels. So I think risk to reward ratio is quite favorable, and Tata still should be bought with a strict stop loss here.
Let's pull up these three stocks. We're talking about Tata Motors, Grasim and Orient Cement. Grasim, from what I can see, is around 873 or thereabouts. We've got a viewer, Narendra Sharma, who's written us a mail. He's bought Grasim at 985, Tata Motors at significantly elevated levels of 377, and he's also bought Orient Cement at 158. Let's pull up Orient Cement and Tata Motors. We won't talk about the last two because perhaps coverage will be a little difficult on those two, but we can get a view on the first three. Orient Cement currently trading at 79 or 80 or thereabouts. Remember, he bought at 158. And finally, let's pull up Tata Motors. He bought at 377, and I think a lot of people have kind of burnt their fingers on Tata Motors, waiting for the uptrend in this particular stock. A further dampener when it came to domestic sales for the previous month weren't really good. Parthiv, we're talking about Tata Motors, Grasim and Orient, all of which we have a viewer who's making losses in. Should he book losses in any one of those and perhaps shift, or should he hold on?
See, firstly, talking about Tata Motors, yes, I think the stock has been a very, very bad underperformer, and I think still there isn't any sort of respite over the next 6 months to 8 months. Our sense is that, we've seen this cycle pan out in Tata Motors in the past, where the JLR pipeline, I think, is going to come in some time, and in between that, the current inventory is having issues to sell, as a result of which the numbers from JLR stable, which is the key element of Tata Motors business, comes very lumpy, and also the domestic business, which is showing some kind of traction. There are exciting new models coming up, and that does not generally drive the stock. So my sense is that they certainly do have a strong pipeline in terms of some very innovative vehicles like iPace, which is just recently been launched, and probably if that is a success, we might see all of a sudden Tata Motors showing signs of good turnaround. So I think I would suggest hold on for a year. Don't book such a big loss in such a company. Probably in a year's time, there'll be a lot more clarity in terms of how the new pipeline is doing, and maybe there's a good chance that if at all things pan out well, there will be a lot of buyers in this stock as well. So hold on for 1 year. Talking about Grasim, I think we were understanding the fact that the stock declined from levels of 1100 to almost levels of 800. The only reason being the key concern regarding capital allocation in terms of what would the company do for the Idea Vodafone merged entity. And probably now there is a lot of clarity of how much capital allocation is going to take place. But I think we are very upbeat in terms of the cement business that it holds via Ultratech Holding, and also the viscose fiber business where they're having a capex. The caustic soda and the fully backward integrated chain that they have is extremely efficient, and that's generating huge amount of cash flow. So I think a lot of negative seems to be already in the price, and if I have to look into in terms of the sum of part valuations of all the holdings that Grasim has plus the core business, I think the valuations are cheap at 7-8 times next year. And I think this is a stock to own over the next 2-3 years. I feel that his level of 975 should be surpassed.
Finally, should he hold on to Orient, or should he book losses?
Yeah, I think Orient has given a lot of pain despite the fact that the deal did not take place with the cement in terms of JV with SAIL. I think one was expecting that would remove a lot of overhang from the balance sheet. But I think the numbers are not coming in at all good. So efficiency issues are there, and probably maybe not the best of the management in the cement industry. So not a bad idea to exit this one. And if you have to stick in the cement industry, I think probably I would say Heidelberg Cement is a far better choice to own.
Okay, let's move on and take a look at the next one. Gopal Dhoot wants to know what to do with 8K Miles software. He's bought it at about 100, and he wants to know how long should it be held on till. Now it's hit an upper circuit of 5%, but do remember it's a stock which has faced a lot of governance issues. Jignesh, I'm going to come to you. Technical view here. What is your take on it? At what point in time should he book profits, or should he instantly book profits?
I think he should go for instant profit booking, just because stock has seen, although stock has seen up moves, but I think volume is empty. The way the stock has fallen, I think this even the dead cat bounce could take stock to around this levels, the way it is showing on the chart. I would suggest to take exit at current levels, because the stock is under erratic moves. The day it will start falling, I think falling will be even stronger. So it is better to book profit. Viewer is among the lucky ones who has got so much profit out of this counter. So he should happily book the profit.
Okay, let's pull up AU Small Finance Bank. We've got a question from Shiva Kumar, he's wondering whether it makes sense to enter. It's 3.2%. Let's pull up the longer term charts and see where it's been, and perhaps you can establish a bit of a trend. If we can, okay, so this year it's been pretty volatile, but that's not really out of place. We've seen a lot of volatility, down about 12% for the year so far. Let's go to Parthiv. Parthiv, from a strategy point of view, if we're talking about small finance bank here, in terms of lending and everything that is to come in, say in the next year and a half, 2 years, based on everything that we're seeing in terms of the liquidity scenario and all of that, what do you have to say with regard to EU Small Finance Bank at this stage? Down 12% for the year. Is it a good buying opportunity?
See, I think one of the best run and I think one of the best positioned small finance bank is certainly AU Finance Bank. They have a fantastic book in terms of the secured book and also the growth trajectory that they have showcased. Despite the fact there were some liquidity issues, but I think this company has mitigated quite well. The liquidity position is extremely strong and the valuations have certainly derated from its peak. And if it were to grow its book by almost 30-35% over the next 3 to 5 years, I don't see a reason why this would not be a stock which will garner very good returns for the shareholders. So AU Finance Bank, in terms of the verticals that it lends to, I think are good in terms of even ROEs that they earn. The ROE should remain stable, and probably I think over the next 2 years there shouldn't be a huge need of fundraising. The asset liability is quite stable. So I believe AU Finance Bank can be a good stock to own over the next 3 years.
Okay, let's move on and take a technical query on Reliance Industries. We have Pankaj Joshi. He wants a technical view with a horizon of 1 month, currently at around 1153. It's declining by around 1.3%. Jignesh, once again, over to you. Your technical view on Reliance Industries with a time horizon of 1 month. What would you suggest?
I think for 1 month the stock is looking quite positive. I think viewers should not worry with the way it has formed today's move. Stock can still be held with the current price 1152 with a stop loss of 1120. 30 rupees stop loss is away. But I think if stock starts moving up and if it goes beyond the high of Friday 1186, it can at least go to 1220, 1230. On levels. So I think viewers should hold on to this counter with a stop loss of 1120.
We've got a query from Joby Elias. He's asking about Orient Electric, if we can pull up that stock. Let's see where it's currently trading. From what I can see, around the 140 mark, if I'm not mistaken. Yes, down about 0.5% in trade today. He's asking if it's a good stock to enter into for the long term. And he's wondering whether to add it into his portfolio for the long term. Parthiv, would you recommend this company? Would you recommend another in the space, perhaps a Crompton Greaves?
See, my sense is in this space, I think one of the best companies to play out is Havells India. I think the management track record has been fantastic. They have done fantastic organic, inorganic growth. Their brand presence is extremely strong. The distribution is extremely strong. And post the Lloyds acquisition, I think they have new areas and verticals where they operate. And I think their products are extremely well accepted. So I think Havells is a stock which could also benefit from the fact that recently we have seen a lot of commodity raw material prices slightly cool off, which should help them. So I think Havells is a stock I prefer.
Okay, all right. I'm going to take one more fundamental view on Rain Industries. The reason here is because we have a couple of viewers out here on YouTube who want to know what's happening with Rain Industries. And as we all know, it has weakened quite substantially. Of course, one of the viewers is Karan Singh, and well, we have a few more viewers on this. So, Parthiv, if you can come in on this. What's gone wrong in Rain Industries, and what would you recommend some of these viewers to do with Rain Industries now?
Rain Industries stock is a cyclical stock in nature. So CPC, calcified petroleum coke that they make, I think it has its set of cycles. In between, there was a talk about shortage and this company having a very huge production capacity, and it did deliver some few quarters of stellar results, as a result of which the stock got massively re-rated. But generally, these commodity stocks are best sell when the earnings are at peak, and now I think probably there is no other trigger left. Market is aware of the fact what is the supply-demand scenario, and probably the aluminum industry is stable, which is one of the key customers for a company like Rain Industries. But I think there's a lot of component about global exposure also that Rain Industries has, and probably I think there are a lot of smart investors who played the cycle extremely well and have also exited at the peaks, as a result of which the stock is having a selling pressure, and probably recently there's no much interest left. So my sense is probably someone holding this stock, it's not a bad idea to exit it.
Okay, let's take a short-term query now. Ram Hegde is asking about Siemens, Jignesh. He's looking to enter now for the next 1 month. On the charts, does that make sense? It's down about 0.9% today.
Yes, I think Siemens chart does not look that attractive. It is still making lower tops and lower bottoms. The way it has formed, over last 2-3 months. Of course, volumes are higher, but I want to look at the falling trend line breach, and falling trend line comes at around 970 levels. So as long as counter is trading below 970, I think there is no buy view that has emerged. So viewers should wait and watch until it reaches 970 on upside.
Okay, the clear loser today is Sun Pharma on the Nifty 50 index, and we have a bunch of questions here. But on Facebook, we have Sandeep Kumar, who is interested in buying the Sun Pharma 450 put. And this is for the December series, which means that he's largely going to, well, he intends to buy the at the money put right now. So Jignesh, once again, because it's a short-term query, I'm going to come to you on Sun Pharma. Would you recommend Sandeep to buy the 450 put, which means that would you recommend Sandeep to go short on Sun Pharma at these levels even?
I think it is quite a courageous bet, but I'm sure that the current charts are in favor of short, because Sun Pharma in last around 1 year, it has taken support from around 450 some levels, but today it has gone below 450 with a huge volume. After it has gone down, it has tried to come up, but it never survived the upper level. So I think this bet can be rewarding with a strict stop loss. If stock goes above 450, 457 level on the cash market, I think viewers should exit from his puts. But currently, yes, he can go ahead and buy 450 puts.
All right, let's quickly get a view on Larsen & Toubro Infotech. We've got a question, I believe, on Facebook from Milan on L&T Infotech. It's currently trading about 0.5% higher. Is this a good bet for the long term, Parthiv?
See, amongst the mid-cap IT space, I think L&T Infotech has done extremely well. The company has scaled up its business very nicely, and L&T as a pedigree always enjoys this relationship with a lot of global customers who tend to give a lot of repeat business because the execution is fantastic, and also they have made decent inroads in the digital space. No doubt, I think the valuations have increased and are a little stretched at this juncture. So probably the markets would want to wait out to see how the H2 also pans out. And then take a call. So the stock might time correct, but if one is having a view over the next 3 to 5 years of holding this company, then certainly probably it would not disappoint the shareholders, and it would certainly be quite remunerative holding this company.
Okay, we have a question on WhatsApp from Srinivas. He wants a technical view on Syngene, which he has bought at 600, and he needs a stop loss. So he's clearly in a little bit of a pickle here, but considering the stock is now trending at around 545 odd levels. Jignesh, how would you help Srinivas? His entry levels at 600, currently at 545. Syngene International.
I think does not look good at all. The way it has fallen and the way it has breached the 565 levels. I think 565 used to be a good support, and stock has breached that level with a good volume. And recently, from last around 4 or 5 days, we are seeing good volumes build up, and stock has been sold into. So I think current levels are good levels to exit. I think you should consider exit.
Okay, let's also take a short-term query on TRACOM, because I think that's one of the stocks in the news today. Certain comfort with regard to bank guarantees, up about 14.7%. On the charts, a lot can be said on the fundamentals, but on the charts, we've got, I think, somebody who's invested, or rather gotten into the stock at 16 for a trade in the short term. What's the view, Jignesh? Should they hold on?
Yes, for short term, it looks a very interesting price formation. It is inverted head and shoulder on the chart. Although, TRACOM has not given a good moves in the past, but from last around 2 days, we are seeing consistent good volumes build up. The stock is above its falling trend line. So currently, it makes sense to hold this counter. 1640 is a level on the screen. I think we should hold this stock with a stop loss at around 15 levels. And at least we can eye 19 or 20 levels within 2-3 days from now.
Okay, we have a bunch of queries on the aviation sector. We have Raveen, who is asking if it is the right time to invest into Jet Airways. We have Sudhir, who holds 100 shares of Interglobe Aviation at around 950, and he wants to know if he can average, because it's clearly it's higher than his entry price right now. And we also have Hashalwani, who wants to know if he can buy SpiceJet in bulk quantities at current levels. So I'm gonna toss it over to Parthiv. Parthiv, we've seen aviation turbine fuel prices cut by as much as 11% now, but there are still a lot of problems, fundamental problems with aviation companies. What would you advise a whole host of these viewers to do with aviation companies, if at all there is any one company that stands out for you here?
See, absolutely. If I have to pick just one company, then certainly that won't be Jet Airways, because I think the company is still nibbling with a lot of troubles, and probably all the case about M&A and rumor mongering, I think it's only done when the money really comes into the company or the stake has been really sold. So no comments there, and I would totally avoid Jet Airways. It has been a disaster in terms of how the stock has performed over so many period of years, despite having at one point in time decent leadership in the categories that it operates. But yeah, Interglobe Aviation, I think certainly this is a stock where I think yes, it's very important to have a view on an aviation sector only when one is extremely confident that the oil is going to stay low and the currency is going to stay stable. Only then the trajectory is known. But I think of late, the way oil has cooled off from its peak and how the currency has behaved and macros have changed certainly bodes well for Interglobe Aviation to start showing decent performance going ahead. And they are the market leaders. They have been in a price war, and once I think things consolidate in this space, I'm sure that the pricing power is going to come back, and Interglobe Aviation would have the highest operating leverage, and also the new fleet, which is 15% more fuel efficient. I think that should also help their cost. So Interglobe Aviation, again, I feel is the only one aviation stock which I feel if one wants to be in aviation sector, this is the only stock to own. Okay,
all right. Let's pull up Relaxo Footwears and see where it's currently trading, around 750, if I'm not mistaken. That's right, 750. We've got Srividya, who's bought at 760 levels. I don't think she bought too long back. She's looking for a one-year view. Jignesh, on the charts, what are the levels that she should watch out for, and what stop loss would you suggest?
For 1 year view, it looks quite good. The way the chart has formed, at least it is higher tops and higher bottoms from around last 1 year. I think support line comes to the level at around 720. So 720 is going to be the stop loss for this hold view. Viewers should see the 800 level, because 800 level is slight hurdle for this counter. If it can breach 800 level, it can surely go to the earlier high. Earlier highs are 880. If stock goes to earlier high at 880, I think new new levels will open up. But currently, it is a hold, or even if viewer wants to take a new entry, I think risk to reward ratio is quite favorable as well, with a stop loss at around 720.
Okay, guys, it's time to hit the rapid fire segment, and I'd like to remind our experts to keep their answers as short as possible so as to accommodate as many queries as possible. Even a one-line answer would absolutely suffice. That's the request to my experts. I'm going to take the first one. The first one is from Bappi Kuri. He wants to know what a better bet is. Is it going to be United Spirits or United Breweries for the long term? So, Parthiv, this one is for you. United Spirits versus United Breweries.
At current levels, United Spirits would be a better option for a longer horizon.
Okay, very quickly, we've got a question from Mayank. Swaraj Engine, would you bet on this for the long term, Parthiv?
Yes, absolutely. I think fantastic company, great dividend yield and great balance sheet.
Okay, Anup wants to know about Escorts. He's holding Escorts at 709. Can he hold on for another month? A month is the time horizon. Jignesh, what would you advise Anup to do?
Yes, he can go ahead and hold this counter. 680 should be the stop loss. 750 should be the first target.
Okay, let's take a question on Dhampur Sugar. Parthiv, all the developments in the sugar space, talking about all of them put together, would you recommend getting into this company for the next 1 to 2 years?
Not really. I think cyclical plays, so I would avoid Dhampur Sugar.
Okay, Jignesh, an easy question for you. SP Foka wants to know an intraday tip for today. What would you recommend on an intraday basis today?
I think for intraday, Bajaj Auto looks quite interesting. 2720 should be the target in the future, should be the stop loss in the futures, and 2790 should be the target.
Parthiv, Ashok Leyland and HDFC Life, long-term bets, would you recommend getting in at this point?
No for Ashok Leyland, but yes for HDFC Life.
Okay.
All right. An unknown viewer wants to know a view on Sun Pharma. He holds 200 shares at 497. He wants a short-term view on Sun Pharma. Jignesh, this one's for you. What would you do?
Exit. I think I have already given the view. Exit is a clear-cut signal today.
Okay, HEG, can you buy at current levels, Parthiv, for the long term?
Yes, for the next 1 year, one can buy HEG.
Okay, well, there you have it, guys. We've run out of time. So on that note, I'm going to thank both our experts, Jignesh and Parthiv, for helping our viewers with all the queries. But that's all that we have on this edition of Ask PQ.
Hopefully, we've managed to answer as many of your queries as we possibly could. Do log in tomorrow, and we'll try and take as many as possible tomorrow as well. For everything that we've discussed on this show and also on past shows, you can log on to the website bloombergquint.com and search for the hashtag AskPQ. Also, up next on Bloomberg Quint is Power Lunch, so do stay tuned.